Hey guys, I made this finance sheet and I wanted to share it with y'all for free. Hopefully it helps out your businesses and everything, but it is a little bit complicated. It's not too crazy, but just for everybody's sake, I would like to dive into it just a tad bit to make it a little bit easier to understand. So to start, we'll just jump right into it. You're only going to be editing the stuff in blue. All of the other colored stuff, you don't have to change. It'll tell you, hey, don't change this stuff, because that's just formulas and titles, stuff that doesn't need to be changed. So only change the stuff in blue. To start, we have our list of clients and prices. Let's say we have 5-10 clients: XYZ, ZYX, ABC, CBA, QWERTY, and let's say all these clients are paying you $1,000 to $5,000 a month. So just pulling some numbers out of my ass, and let's say it is 10 clients, okay? These are all your clients and how much they pay you. Pretty simple. Moving on to the next section, costs related to fulfillment. These are the costs directly related to servicing your customer, okay? So without one of these, you would not be able to fulfill your product, right? So common for marketing agencies is going to be stuff like Go High Level, your website, some domains for your website, stuff like that. Let's say it costs $400 a month for Go High Level, your website $300 a month, and your domain, even though like 83 cents for a domain a month, let's say it's $10, okay? Just more random numbers. So again, cost related to fulfillment, costs directly related to servicing your client, okay? Other costs are going to be costs in your business that are not directly related to fulfilling whatever you offer. Okay, so it's going to be stuff like rent, repairs for your office, utilities, office supplies, stuff like that. Okay, let's say your rent is $1,800 a month, $1,900 works. Repairs, let's say you break a lot of shit, so $150. Utilities, $130. Office supplies, $50 a month on office supplies. Okay. Next section is going to be assets. When you're filling out this section, I want you to keep one thing in mind. It's not worth as much as you think it's worth, okay? Say you have 10 computers. Let's say they're Apple MacBook Airs. That would be $10,000. $1,000 per computer, 10 computers. $10,000 is how much you would have bought it for. Chances are you're going to be able to sell that shit for half as much as you bought it for. So let's say those are worth $4,000. You have a microphone, and you have cameras. Okay, so your microphone's worth $150. Cameras are worth freaking 300, whatever. Let's say it's a high quality camera that you bought for like $600, whatever. Just more random ass numbers. But the important part with this section, it's worth less than you think it's worth. Keep that in mind. For liabilities, this is going to be debts you owe to other people. So that's going to be like loans. Let's say you have 2 loans, and then credit card debt, for instance. Let's say your loan is $450 a month. No idea what you bought on that. Loan 2, let's say it's $150. Credit card, $250K. This is not total value. This one's monthly value. So remember, assets is total value. Liabilities is the amount you pay per month to that loan provider. Now we start getting into the more interesting information over here. Churn and lifetime information is going to be the first cool one we get into, okay? To calculate this, you are not going to include new sales. So let's say clients at the beginning of the quarter, let's say you have 10 at the beginning of the quarter, and then at the end of the quarter, you have 6 of those 10 clients, okay? So 10 at the beginning. Of those 10, you have 6 of those 10 left at the end of the quarter. Now these two are measured quarterly. They are the only two on this entire document that is measured quarterly. That way the information is a little bit less volatile, okay? The broader your time horizon, the less volatile it becomes. Churn expressed as a percent is going to be 40%. Average lifetime in months, just so it's easier to comprehend, you have 8 months roughly. That's roughly how much a client is going to stay with you for. Moving on to employee data. Number of fulfillment employees, that's going to be employees directly tied to fulfillment. So let's say you outsource SEO to somebody in the Philippines or somebody in India, okay? And let's say you also outsource web design or something like that, okay? So let's say you have two clients, two employees. Both of those employees are directly related to fulfillment because that's what you offer as a marketing company. Total cost for all these fulfillment employees, let's say you pay $1,200 a month for both of your fulfillment employees, okay? Number of other employees, this is going to be employees that help with operations, not with fulfillment, okay? So that's going to be like HR or a virtual assistant, okay? Let's say you have one virtual assistant and she costs you $1,300 a month, okay? Now these numbers right here, cost of all employees, it's just addition of these two numbers. Revenue per employee, and all three of these are calculated based off the information over here. So you can come back to these ones, but first we need to understand what these are, okay? Other information, we're moving on to this section right here. Let's say you have an advertising budget of $3,000, okay? And just for a random number, let's say you're getting one client per $1,000 you spend roughly. So let's say you got 3 clients per month per $3,000 you spend on ads. Moving on to expected tax rate. This is going to change for everybody, depending on the deductions you could get, whatever tax strategies you're employing. This one is going to change frequently. It just really depends on your unique situation. For me, let's say my expected tax rate is 35%, okay? And to look forward just a little bit, if you're losing money every month, like monthly net profit is $0 or less, you're just going to keep this as 0, okay? But since we're making a profit, say it's 35%. Expected valuation multiple right here. This is to figure out how much your business is worth, okay? And this one is very highly estimated, all right? It will change per business, and heck, per person that's willing to buy your business will give you a different multiple, right? But standards that I see is going to be 2 to 5x for a marketing company. For the lower end marketing companies that have like less revenue, less clients, it's going to be on the lower end, obviously, so like 2. If you're making like $1 million plus a year, it could even go above 5. But just for simplicity's sake, to not overvalue our own shit, let's say it's 2. Okay, this is when we start getting into the cool values and the financial health of the business, okay? So to break this down, we have our monthly revenue, $24,000. This is just how much all of your clients combined pay you per month, okay? Monthly cost of sales, this is going to be the cost of your fulfillment employees, so this section right here, and the costs related to fulfillment, this section right here, okay? So that's 1910. Let's just say 2,000 for simplicity's sake. Let's say your cost of sales is 2,000, monthly revenue is 2,400. Monthly gross profit being next is what is left after subtracting cost of sales from monthly revenue, okay? Monthly gross profit is what you are operating the business out of, okay? This is a very important number right here. Gross margins, 92%. That is just gross profit expressed as a percentage, okay? Moving down to operational expenses. This is the costs of your other employees, okay? Operations, the costs of other costs, and the costs of advertising, okay? Those are all operational expenses. And then subtracting your operational expenses from your monthly gross profit leaves you with your operating income, $15,000. We're going to dive a little bit more into this in just a moment after we get through these numbers right here, okay? Lifetime gross revenue is how much you could expect one of your clients to spend with you over the amount of time they work with your business, okay? So the average lifetime of a client right here is 8 months, okay? And on average, a client will spend the average of these numbers, and it will give you a lifetime gross revenue of $18,000. So that's just as simple as possible. When you get a client That's how much you could expect them to spend with your business before they leave. Lifetime gross profit is very similar to lifetime gross revenue in the fact that it's like how much they're going to spend with you over their life, but it's just the gross profit instead of the gross revenue. Okay. Cost to acquire customer. This is how much you can expect to spend to get a new client. Okay. LTGP to CAC ratio. This is just these two numbers, but in a ratio format. Okay. 3 and up is healthy. That allows you to scale your business. Anything lower than that, you start getting into like the struggle zone. Because if it's 1 to 1, you spend $1 to make $1 from a client, you're not going to be growing too fast. So 3 and up is healthy. Once we move into the hypothetical maxes, we have our monthly net profit and loss. And this is estimated because your expected tax rate will change. You don't really know what that is until you do your taxes, okay? So just the estimated, which will estimate your monthly net profit and loss. If you're operating at a loss and this goes negative right here, you want to keep R25, so expected tax rate is 0, because you're not going to get taxed if you're losing money. If you're getting money, it needs to have something here. If you're losing money, keep it as 0. Monthly net margin is going to be your net profit or loss, just expressed as a margin. Okay. Next up is EBITDA. Don't think too much about this one. It's just to help evaluate your business. It's what investors use. So it's essentially just used to calculate these numbers right here. Sales velocity times lifetime gross revenue. That is your sales velocity, which is the amount of clients you're getting per month, times the lifetime gross revenue. So this means your hypothetical max that your business can reach in lifetime gross revenue from a client is $54,000, okay? And currently you're at $18,000, which means you could go from $18,000 to $54,000 without changing too much, okay? I'm going to get more into that once we get to sales velocity divided by churn, okay? So this is what your business can be at. This is what your business is at, okay? Sales velocity times lifetime gross profit is very similar to sales velocity times lifetime gross revenue, except it's measuring gross profit instead of revenue. Now your estimated revenue gap, this is how much you can be making, so the $54,000 per client, and what you're currently making, $18,000 per client. That's just the gap between those two, okay? Now this is the number that I think is really cool. Sales velocity divided by churn, okay? That gives you 8, which is the clients you will have at the hypothetical max. Now to explain that, you are getting a certain amount of clients per month. In this section right here, you're getting a certain amount of clients per month, and you are losing a certain amount of clients per month, okay? So eventually, those are going to balance out, okay? You're going to be getting the same amount of clients as you lose every single month, which is going to stop you at about 8, okay? Return on advertising, that's just you get $2.40 for every dollar you spend, okay? Now your estimated business value, it is based on the multiple you put over here. It will not display under $100,000, but it's just what your business is likely sitting at. Excuse me. And your future business value, if nothing changes, this is your hypothetical max. Now, as you can see, current business value is $77,000 above your future business value, which means this business is going to shrink, okay? Now, why is that? Sales velocity, since we went over all of these numbers and they make a little bit more sense now, I'm going to start kind of like diving into how they work with each other. Since your business right here is going to shrink, this is why, okay? Your hypothetical max being 8 clients changes the fact, or it means you have too many clients, okay, for the amount you're losing per month and the amount you're gaining per month. So your business is going to be shrinking, okay? Currently you have 10 clients. That means if you cut out 2 of them and you get to your 8, these numbers match up now, okay? The current business value did go down because one of the clients you cut out was worth $2,500. So since you have less clients, your business is worth less, but it is balanced out with that now. So that means your business is at its current max, okay? Let's say we get rid of some more clients. Now, current business value is 233,000 and your max business value is 271,000, which means this business is going to grow because you're going to get to this hypothetical max of 8 clients before it stagnates and stops, okay? Now, I want to get into some strategies on how to make your business worth more money, okay? So that was the big one right there, sales velocity divided by churn. How do we make this number bigger than 8? Okay, because that'll increase your future business value. It won't increase your current business value, but it will increase the future business value. Here's one way. Let's say you have 10 clients at the beginning of the quarter, and then of those clients, you have 6 at the end, which leaves you with a churn of 40%. I want you to keep an eye on this number right here, lifetime gross profit. It's at 17,000. If instead of losing 4 clients per month, you lose 8 clients you don't lose 8 clients per month. Excuse me, let me restart. Instead of losing 4 clients per month, let's say you lose 2 clients per month. So of those 10, you keep 8. That reduces your churn to 20%. You just doubled your business, okay? Look at that number now. It just doubled. Quite literally. So that is one major way to double your business. If we make it 9, half it again, it doubles yet again, okay? Because the average lifetime in months goes up so fast. This is a big number in your business. This one really matters, okay? Next up is going to be this number down here. First, if we take a look at this, that just went up to 1 million, okay? Why did that go up to 1 million? This one stayed roughly the same. It's because you're keeping more clients per month. So sales velocity times churn is up to 30. Instead of being able to hold 8 clients, you can now hold 30 clients in your business, okay? So that means this business is going to grow, okay? On to the next important one is advertising, okay? Let's say you're still getting roughly 1 client for every $1,000 you put in. Let's say you put in $6,000, okay? And you're getting 6 clients per month. Since you're getting double the amount of clients per month, this also doubles right here. It went from 30 to 60, okay? That means you could hold significantly more clients than you're currently at. And your future business value goes up, but your current business value went down because you're spending more money on advertising than you were before. Let's keep that previous number of 3,003, okay? Your SV divided by churn is 30, which again means with time, if nothing changes, you don't get more expenses, your fulfillment doesn't get worse, you keep the same amount of employees and they're doing just as well. This is why it's hypothetical, because that's a lot of ifs. You will get to 30 clients. And currently, we are at 7, okay? So we go back here. Let's say Control C, Control V. Let's get ourselves up to those 30 clients real quick. Once we get to those 30 clients, we are currently at the max. So these numbers balance out yet again, okay? That means the business is not going to grow. This number is very important to know, okay? So when looking at this, I want you to keep all these things in mind because now it should be fairly understandable and easy to fill out. Keep these in mind. This matters a lot. All the numbers matters, but if you want to increase the value of your business, this number matters, these number matters, this number right here, and then this one right here. Keep all those in mind when filling this out. Now, again, when you're filling it out, be as honest with yourself as possible, okay? You don't want numbers that are just all skittily wampus because then it's not even your business. Be honest with yourself, especially right here, and try and make these numbers, how much you're paying per month, as accurate as possible, okay? Hopefully, this helps you out with your business. It's completely free to use. Heck, even feel free to email me it, share it with me. I'd love to take a look at it. It'd just be interesting to see. hopefully this helps you out. Thank you.